saved up in order to tackle any issues that might arise, protecting your investment from impulse sales due to financial crisis. Real estate management can be pesky, having to take care of tenants, repair and maintain the property, having to deal with vacancies and finding new tenants, and facing legal issues like lawsuits, all require time and money to handle. One way to minimize these risks is by having a good tenant vetting process in place. Some of the things you should be looking for in a tenant are clean background checks, good credit scores, particularly payment history, good references, no prior evictions, and just a solid feeling of the person. Get to know your applicants when they go in to tour the property. You don't have to interview them all crazy, but you can usually figure out who's a good fit within a few minutes of meeting them. Trust your instincts. A good tenant is worth their weight in gold and will keep issues non-existent as long as you're putting in work on your end. You may also consider hiring a property manager to handle the day-to-day tasks for you, leaving less money in your pocket but more time on your schedule. Real estate has a decently high entry barrier, meaning you typically need significant upfront capital. I could open a brokerage account today and start investing in stocks for $1. Real estate, on the other hand, is not easily accessible to new or low capital investors, with the exception of REITs or real estate investment trusts, which function somewhat similarly to the way stocks do, but that's a whole other video on its own. A good way to overcome this obstacle is by purchasing a property as a primary residence in order to lower your down payment significantly. For example, if you purchase a $400,000 property as an investment using a conventional loan, you typically need 20% down, which equals to $80,000. But if you purchase the same property with an FHA loan instead as a primary residence, you'll only need 3.5% down, or $14,000 down. Way less money for the same asset. I teach you how to do this in my real estate course, link in the description below. Real estate may also be subject to downturns, such as the housing market crash of 2008, where property values plummeted to rock bottom. Local markets can also be very volatile and unstable, even if national trends are running strong. For example, if a big wildfire sets off in your area, housing values may drop while pretty much everywhere else in the nation continues to rise. A good way to minimize this risk is to be patient during the downturns. Do not panic and look to sell your investment as soon as possible, as you will ultimately lose a lot of money. Instead, hold on to your property, as values will eventually climb their way back up to normal levels and even surpass them. So when is real estate the best investment? Real estate is the best investment when you want long-term, stable income, either from rents or owner financing. You prefer tangible, physical assets with many more opportunities than just digital ones. You can efficiently manage your rentals, either yourself or with a good management company or staff. You want very high leverage with much lower interest rates. You can get good deals on underperforming property and add value to it, and you're looking to buy in a growing market with good fundamentals. Understand these principles of real estate, and it will make you very